Ladies and gentlemen, good day and welcome to Krsnaa Diagnostics Limited conference call hosted by Equirus Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand over the conference to Mr. Bharat Celly. Thank you, and over to you, Mr. Bharat.
On behalf of Equirus Securities, I welcome you all to Q4 and FY22 earnings call of Krsnaa Diagnostics Limited. From the management, we have with us Mr. Rajendra Mutha, Chairman and Whole-Time Director, Ms. Pallavi Bhatevara, Managing Director, Mr. Yash Mutha, Whole-Time Director, Mr. Ravindra Sethi, COO, Mr. Pawan Daga, Chief Financial Officer. We will begin this call with the opening remarks from the management, and then we can open the line for Q&A. I now hand over the call to Mr. Yash Mutha. Over to you, sir.
Thank you very much, Bharat. Good afternoon, everyone, and welcome to Krsnaa Diagnostics Q4 and FY 2022 earnings call. We have already circulated our earnings presentation, which is available on our website as well as on the stock exchange's website. I hope you all have had the opportunity to go through the presentation, and we will be happy to take any questions afterwards. The fiscal year 2022 has been a landmark year in the history of Krsnaa Diagnostics. We made our debut on the stock exchanges in August 2021, and now we are closing the first year as a listed entity on a strong note with the highest growth in our core revenues within the industry in both Q4 and FY22. On a full year basis, we delivered revenues of rupees 455 crores, which is in line with our stated guidance of around rupees 450 crores for the year. We have delivered a robust top-line growth of 15% year-on-year, led by growth in our core business of radiology and pathology, which grew by 70%. And this growth was offset by a decline of 78% year-on-year in the COVID-19 revenues. Our core business contribution was 93%, with radiology and pathology contributing 55% and 38% to the revenues respectively, whereas COVID-19 business contributed 7% to the total revenues in FY 2022. Our EBITDA was at rupees 133 crores, which is up by 40% year-on-year, and we maintained strong margins of 29.3% in this year. Furthermore, it is encouraging to see that our profitability has more than doubled, and we delivered net profits of rupees 68 crore, which is up by 117% year-on-year. Krsnaa generated strong cash flows from operations of rupees 135 crores with an EBITDA to cash flow conversion which was around 101%. A very important fact here, our receivable days have reduced to 46 days, which is a testament to the transparent sharing of information with the national health authorities and bodies, as well as the robust cash collection processes that we have built and strengthened over the years. From a balance sheet perspective, the company has become a net debt-free company with net cash flow position of rupees 307 crores as on 31st March 2022. In the light of the strong performance, the Board of Directors have recommended a final dividend of rupees 2.5 per share, a payout of 50% on the face value, which is subject to shareholders' approval. The strong financial performance during the year was driven by strong increase in the test volumes across all modalities except COVID-19. The total number of tests conducted were 17.3 million, a growth of 84% year-on-year. Radiology tests, excluding Tele Reporting, grew by 57% year-on-year, and Tele Reporting tests grew by 40%. In pathology, we crossed 12 million tests, and the volumes grew significantly by 124% year-on-year to 12.16 million tests. Our CFO, Mr. Pawan, will discuss the quarter financial performance in more detail later on. During the year, we continued to move forward with our core strategy to expand business footprints in India, and the dedicated team was relentlessly working towards operationalizing new centers as per the recently awarded contracts. In total, we've added 20 radiology, 103 telereporting, and 118 pathology centers, which is expected to contribute meaningfully in this next fiscal year. Overall, we observed increasing awareness and visibility of Krsnaa brand and its diagnostic centers as our high-quality services at disruptive prices continue to drive the growth in patient and test counts. As I said earlier, FY22 was an important year for us, and I would like to take a moment and look back at the performance of the company in the last 5 years. In the last 5 years, the company has delivered a fast-paced growth and remains one of the fastest-growing diagnostic service providers in India. We have expanded our geographical presence by leaps and bounds from 50-plus centers in FY17 to over 2,000-plus centers in FY22. During this period, our revenue from operations has grown at a CAGR of 47%, and net profits grew at a CAGR of 101%. Radiology and pathology revenue grew at a CAGR of 40% and 52% respectively during the same time. Today, Krsnaa is the only listed company with well-diversified mix of radiology and pathology, with both businesses poised to grow from here on. Looking ahead, we are confident that we will be able to maintain our growth momentum, and therefore we have charted a clear strategic roadmap to double the revenue and triple the profitability in next 2.5 years. The growth will be driven by our 5 building blocks, for which I will hand over the call to Dr. Sethi, our Chief Operating Officer, who brings over 24 years of experience in the fields of business management and has a vast industry experience. Over to you, Dr. Sethi.
Yeah, hi. Thank you, Yash. A very good afternoon to all of the attendees. Now I'll elaborate about our growth strategy plans. So we talked about 5 growth pillars. So first pillar being growing PPP opportunity. On the public-private partnership front, there is a large under-penetrated market, and out of 700 plus districts, our presence is approximately in 70 plus districts. And with government's continuous focus on improving healthcare, and we being largest PPP partner with 78% bid-win ratio, Krsnaa is very well placed to capitalize the growth opportunity which is present. The company in the month of February 2022 has been awarded 3 new projects. One, Himachal Pradesh pathology comprising of 24 labs, 190 collection centers. Number 2, Chandigarh, 1 MRI machine. Number 3, Uttar Pradesh for deploying 8 CT scans in district hospitals. We will continue to participate in new tenders and build a strong pipeline for future. The second pillar is successfully rolling out our new centers. Our team is focused on successfully rolling out new centers. There are 9 radiology centers which are expected to operationalize in Q1 FY23, and there are 8 centers for which construction is completed, and 3 centers already wherein work is under process. Similarly, on the pathology side, we have got around 11 labs which are expected to operationalize in Q1 financial year 23. We also have strong pipeline of recently awarded contracts, which is expected to launch in very phased manner. Third pillar, if you have looked at our centers portfolio, 36% of the growth blocks constitutes of semi-matured and newly launched unit. which represents Krsnaa's portfolio, which is still very young. With maturing of centers, we expect patients, test count to increase, and profitability is expected to improve significantly in coming years. We are building a strong foundation for long-term sustainable growth. Our fourth pillar would be, since we are fully geared to disrupt the growing retail market, our aim is to expand pathology business by capitalizing on extensive infrastructure of existing pathology diagnostic centers, by adding more and more collection centers and reaching to end consumers. We are planning to expand in 5 key states, which are Maharashtra, Punjab, Himachal Pradesh, Rajasthan, and West Bengal in a phased manner. This will be an asset-light expansion where we will be reaching out to direct consumer under our PAC model, wherein P stands for pick-up point tie-ups with hospitals, nursing homes. A stands for awareness, which is creating awareness through trial generation camps, wellness packages. C stands for collection center additions, and H stands for home care services, which we'll be launching. Our fifth building block would be creating awareness about Krsnaa's high-quality service offering at disruptive price through digital marketing. The exceptional growth that Krsnaa has delivered in last few years is with limited marketing, and now company is adopting digital marketing strategy to further enhance Krsnaa's visibility and awareness. We are also increasing our social media engagement on health awareness, free cancer camps, association with nursing homes, charitable institutes, corporate tie-ups, and associating with various e-commerce aggregators. We are relaunching our mobile application, which enables patients to download their reports in real time. We are also coming up with smart health reports, which will give patient additional recommendation on their health. Patient will also be able to book appointment of radiology tests and also for their home collections. These are 5 growth initiatives which is expected to drive next set of growth for Krsnaa. Before I conclude, I would say that real clear strategic growth plan supported by a favorable industry dynamics and a well-capitalized balance sheet, we believe Krsnaa Diagnostics is well placed to deliver accelerated growth in coming years and will remain fastest growing differentiated diagnostic service provider in India. With this, now I'll hand over this call to Mr. Pawan Daga, our Chief Financial Officer, to discuss financial performance. Over to you, Mr. Pawan.
Mr. Pawan, are you online?
Sorry. Yeah. Thank you, Dr. Sethi. A very good afternoon to all attendees. I will present financial highlights for the quarter and full year ended March 2022. In Q4 of FY22, company registered revenue of rupees 108 crore, an increase of 13% year-on-year basis from rupees 96 crore in Q4 FY21. Core business comprising of radiology and pathology posted revenue growth of 28%, while COVID-19 revenue declined 85%. Operating EBITDA for the quarter stood at rupees 28 crore compared to 34 crore in Q4 FY21. EBITDA margin are at 26.2% in Q4 FY22, and margin were impacted on substantial basis due to investment in operationalizing new center and investment in manpower. Profit after tax for Q4 FY22 was rupees 18 crore, a growth of 21% compared to Q4 FY21. Net profit margin were 16.6% for the quarter. Please note that the net profit has been adjusted for exceptional items. On a full year basis, the company has delivered strong growth on all parameters. Revenue from operations stood at rupees 455 crore, an increase of 15% year-on-year basis from rupees 396 crore in FY21. Operating EBITDA stood at rupees 133 crore, a growth of 40% year-on-year basis, and margin improving significantly to 29.3% as compared to 24% in FY21. EBITDA margin improvement can be attributed to higher number of tests, increased contribution from core business, stabilizing of a cost of material consumed, and improving operational efficiency. In FY22, PAT was rupees 68 crore, a growth of 117% from 32 crore in FY21. Profit after tax margin were 15% as compared to 8% in FY21. We continue to generate a strong cash flow from our business, and in FY22, cash flow from operations before tax of rupees 135 crore, with EBITDA to cash flow conversion of 101%. This is a result of efficient working capital management and a strong cash flow conversion cycle. During the year, we incurred a total capex of rupees 131 crore towards setting up a new center, of which rupees 72 crore was funded from the internal accruals and 59 crore was funded from the IPO proceeds. At end of March 22, we remain a debt-free company, and our net cash position stood at rupees 307 crore. This is all from my side. Thank you very much. We can now open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avnish Khara from VT Capital. Please go ahead.
Good afternoon, everyone. Am I audible?
Yes, you are audible, Mr.
Yes.
You can go ahead.
Okay. So my first question is, I just want to understand the kind of government hospitals that we're targeting for the PPP model. So are all the hospitals that we're targeting going to be having complex surgeries? So the reason that I'm asking this question is that I understand that, a large chunk of your tests and inflow of patients will be coming from complex surgery patients, right? So I just want to get a sense of what kind of hospitals we are targeting and what is the average size of the government hospitals where we want to set up centers.
So basically, when it comes to public-private partnerships with the government hospitals, it is not that we look at or we target. Basically, the government publishes a tender, and the tenders are normally rolled out for district level hospitals where there is a requirement to set up diagnostic centers, whether it is CT scan, MRI, or the pathology center. By virtue of which, when you look at it from a complexity perspective, or most of the district hospitals are where you see most of people coming from the talukas and villages coming and visiting these hospitals for various modalities, whether it could be orthopedic, whether it could be gynec. So basically, these district hospitals are have enough doctors to prescribe these tests, and not just necessarily surgery-driven tests that come to our centers. So it's a mix of various lines of medical services or requirements that these patients have, for which the patients come to our centers. So our business is not just dependent on surgical such kind of tests.
Right, sir. And my second question is regarding the monthly capacities in your hub. So I see that they've increased to a certain extent. So does that mean that your focus is going to be more on tele reporting in the next couple of years?
Yes. So basically, what Krsnaa has, one of the unique differentiators is our tele reporting hub, through which we are able to leverage, our expanse spread across various locations, and leveraging technology to provide quality reporting in quality time. To enable this, we are continuously adding technicians, doctors to our team, which also gives us additional capacity to process. Because as we undertake new projects, we are also trying to have enough bandwidth so that these volumes, as they start coming in, we'll have enough headroom to process these volumes and do the reporting in within the shortest time possible.
Right. And is there any guidance that you can give on how much it can contribute to the top line going forward?
So tele-reporting, which is a separate vertical for us, that we expect to contribute about 8 to 10% going forward as well. And as hopefully more and more PPP projects come for tele-reporting, this contribution will also further increase.
All right. And I just have one last question on an accounting. So the other financial assets has a 116 crore number. So what exactly is that?
Other financial assets?
Yes, sir.
Just hold on. I'll ask Pawan if he can just look into it.
Yeah. Yes. So other financial assets includes the assets which we pay deposits or EMD to various authorities and various hospitals for running a center over there.
So these are basically your security deposits and earnest money deposits that we have for these various projects, as well as with some private hospital partnerships where we have given some security deposits.
And in addition to that, some fixed deposits which are more than 3 months of a tenure.
Okay, sure, sir.
Fixed deposits.
Got it. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Praveen Sahai from Edelweiss Financial. Please go ahead.
Thank you for taking my question. Sir, just on the last question, that's other financial asset, which is a deposit. So why it's jumped up on a YOY side, like from a 21 to 22, there is a significant jump in that number.
So majority of chunk in other financial assets is mainly a fixed deposits, which is more than 1 year kind of, and some of the IPO process which is not utilized, and that is part under the fixed deposits, and that's also lying in the other financial assets. That's why we see a jump year on year basis.
Okay, fine, sir. Next question is related to the utilization, and I can see that we are at a, as per your capacity, your utilization level at a 40% or 48% for a CT and MRI. So, at what level do you expect this utilization to move on a blended basis?
So when you mean move on, as in how this capacity utilization will increase?
Yes, sir. So basically, if I look at last year to this year, CT scan 32% to 42% utilization has moved up, as per the monthly run rate. And similarly, 10% increase in the MRI as well, we can see. So this 42% of utilization, what all initiatives you are taking to reach to at what level you can go to a 60% or a 70% or a 100%? What's the the target for?
So if you see from a capacity utilization, in COVID, we've already tested where some of our centers, for example, CT scan, where we've crossed or done very high level of volume. So of course, from a theoretical capacity or in which we've tested, we can do up to 100% capacity utilization. Having said that, on a normalized basis, now that we have steady state business going on, and we expect this number to increase. Your question, how do we plan to increase the capacity utilization? Of course, like Dr. Sethi also mentioned, today with Krsnaa, these disruptive prices, with more of awareness being created in the minds of consumers, more and more patients start coming to our center, which is also, you can see from the volumes that we have increased both in terms of patients as well as the tests. So as more and more people start availing these tests at our centers, you will see a certain improvement in these equipments, whether it's a CT scan or an MRI. Now, also one thing to note here is most of our centers, like we mentioned earlier, they have been recently established, or the expenditure of capex has happened recently. So as the centers mature, they will also further add to improvement in the capacity utilization of our centers.
And the newer capacity or the CT scan or MRI you installed have a similar nature, like a similar kind of per test per day numbers, or it's a lower?
No, it will be the same. So generally, when we look at any project, then our benchmarks or in terms of metrics, the kind of volume growth we expect is more or less the same.
And the equipment we deploy all are world-class equipment, and this the newly added equipments also have an better technology, better softwares, and this thing.
Okay, so it's a similar numbers as what in the previous numbers or even the higher. And the next question is related to there is a news to central government health services. There is some delay in the payment. So have you also seen some kind of problem?
No. In fact, as we stated in our presentation as well as during the earnings call, from a recovery perspective, we've been able to have a very solid and strong recovery. And this is because, as we mentioned earlier, our processes in terms of publishing data to the authorities, which is a very transparent process. Krsnaa is one of the only companies which publishes this data in real time to the government authorities, which ensures that there are periodic audits done on the numbers that we do. Secondly, our processes, internal processes to collect our recoveries. And most importantly, these projects are all backed by NHM, which is National Health Mission, which is again a central body which contributes or which is known as a good paymaster. So if you see a combination of all these fronts, our recoveries have been good, and we're confident that this trend will continue. In fact, a positive news is that in most of these tenders that are coming up, governments are putting up clauses where, like as for a recent tender, the government also stipulated that if the payments are not made in time, the bidders or vendors can also, suspend their operations. So government is also aware of this. They are also taking equal measures to ensure that the players or the partnership that is there as part of the PPP model, the partners don't suffer and they do get their dues in time. But of course, there are procedural delays, which normally these processes are lengthy, but to the extent we're trying to see how we could improve on this. So we don't see a significant challenge going forward.
Okay. And related to the Punjab, you had mentioned that's nine of the radiology centers has been operational so far. So it is on the time as expected for the 25 centers?
So Punjab-wise, there have been certain delays, largely because the government has to hand over the sites. Then there was also a change in the government. So when the new government comes in, they take time to understand, the earlier project. And so there have been some delays, but I don't think so that's a very significant delay. These are part of our business, and but the government is also very supportive, and hopefully we should be, completing all our installations in time by end of this, I think, first quarter FY23.
Okay. Thank you, sir. Thank you for taking my questions. I'll come in the queue.
Thank you. The next question is from the line of Prasheel Shah from Capgrow Capital. Please go ahead.
Yeah, hi. My question is regarding the clinics that have been put up. So how long does it take for a center to mature usually, and what would be the payback period?
So typically for our CT scan, our payback normally is in the range of 3 to 5 years max. MRI normally ranges up to 5 years, given the investment is also higher. And our centers normally mature within 3 years of time. The first 6 months to first year is normally the installation phase, that people start getting to know that there are the services that are being available. And as more awareness is being created, more mouth-to-mouth publicity happens, more and more people start coming to our center. Pathology, again, from a pathology perspective, the payback could be just a couple of months as well.
Sorry, couple of months payback, coming back?
Yes, for pathology, given the investment is low, but considering some of these equipments are also available on reagent rental model, the payback it could be a couple of months, depending on the size or which contract or which tender it is.
Okay, and what would be the capacity difference between the capacity utilization for a mature store and a center and a center that is still evolving? What would be the difference between the two in utilization?
Could you just repeat the question? We are not able to hear you very clearly.
So what would be the difference in the capacity utilization between a mature clinic and a clinic that is still evolving?
I'm sorry, you're referring to a clinic. I would consider that to be a diagnostic center. From a capacity utilization perspective, when we start any diagnostic center of a CT scan on the radiology side, it typically starts with ranging from 10% capacity utilization, and for a mature center it could go up to almost 60%, 70%. In some of the centers we've even done 80% capacity utilization.
So after 3 years, you would be expecting it to go up to like 60% and then move to 70, 80, right?
Yes.
Okay. And when you mentioned about awareness, so do you do any campaigns apart from, let's say, so what source do you rely on for awareness? Is it just word of mouth, or do you conduct these marketing campaigns, awareness campaigns?
So if you see historically, Krsnaa has not spent or done significant marketing efforts, though we've been able to achieve this CAGR growth of almost 50% over the last couple of years, thanks to our model, which is a captive customer model. Now, what happens here is when we establish these diagnostic centers within hospitals, so we see there is already a patient flow that is coming to these hospitals, and if you leave aside cities like Pune, Mumbai, Chennai and all these metros, as you go, most of these district hospitals are where most of the patients come to get their tests done or their diagnostic tests or medical services done. You won't find bigger brands there, and that is where we see a lot of captive footfall for us to first leverage into. Now, as these patients come and they avail these services, if you see both from an interiors perspective, the ambience perspective, like Pawan mentioned, our equipments are world-class equipments. So when the customer gets a very unique and differentiated experience, and when they go back home carrying our report also, which we get in time, these customers itself go and do a lot of mouth-to-mouth publicity, where they say, in their families or in their friends that, hey, if you need a CT scan, MRI, go to Krsnaa centers in such and such hospitals. So this has been where historically we've been seeing a good traction of patients creating more awareness for us. Having said that, now, of course, today Krsnaa, as Dr. Sethi also mentioned, we are also trying new age, marketing initiatives, whether it is digital campaigns or as well as, local community level campaigns, which we've been doing. So I think going forward, of course, we'd want to harness these, methodologies and also create more awareness for the Krsnaa brand.
And there was a dip in average revenue per patient, which was also the case in the previous quarter and the quarter before that. So why was there a dip in this quarter again, and where do you think it would settle?
Could you just repeat that question?
There was a drop in average revenue per patient. So why was there a dip, and where would you see this settling, at what rate?
So if you see, it's not per se a dip. The dip was largely attributable to COVID. and COVID-related tests. But if you compare on a year-on-year basis, actually there's been an improvement of our average revenue per patient almost, which has increased. And if you see our model today, our prices are almost 40 to 80% lower than the market rate. And also there's a price escalation embedded into our contracts. So from that perspective, I think whatever prices you're seeing are rationalized prices. And in fact, if you consider the prices, an ability to increase in the coming quarters or coming years.
Okay, and lastly,
the prices are fixed as per the contract. So there is no external pressure for us to reduce the prices.
Okay. And lastly, to the Tele Reporting side of the business, could you explain what kind of tests are being conducted under Tele Reporting?
So Tele Reporting is essentially, for all the CT scans, MRI, and the X-ray side of the business, which is the radiology business. All our centers are connected to hub in Pune. So, for example, if you have a CT scan in Jammu, the moment the CT scan is done, these images are transmitted to our hub in Pune. They are first analyzed for various quality parameters. Then they are assigned to 200 plus radiologists that we have with us. These doctors do the reporting and they send the report back to the hub, where there is again a final quality check, after which the report is released to the center. In this example, it could be Jammu. So these images are processed at the hub to the Tele Reporting model. And this is where we are able to leverage technology, wherein even in far-flung places where there is a shortage of radiologists or reporting was not done on time, through this model, now the reporting happens within the stipulated turnaround time, which is on average 2 to 6 hours for a CT scan or MRI cases.
Yeah. So how is the center making revenue when the tests are conducted by you? So once the patient would get the test done, he'll be paying.
I'm sorry to interrupt, Rashil. You'll have to come back in the queue.
Okay, fine. Thank you.
The next question is from the line of Purvi from Kotak Securities. Please go ahead.
Thank you and good afternoon, everyone. So I have two questions. One is mainly on account of that you've already explained why the increase in financial assets. So I just wanted to understand that are these deposits refunded after a year or whatever the time period is? And secondly, on the receivable base, as you explained that, because the national health agencies are prompt in paying up. So what changed this year compared to the last 4 years?
Question.
Hello?
Yeah. To answer your first question, in terms of the security deposit, basically all these deposits that we have with these private hospitals, these are all on refundable basis. Even the EMD money that is being given to the authorities for various tenders, they are refundable. So basically we have access to all the deposits, and as and when the tenure gets over or the terms get over, these deposits will be refunded back to us. To answer the second question in terms of collection and receivable days, as I mentioned earlier, today across various governments, we are also seeing this thrust in terms of establishing stronger processes to ensure that the PPP partners get paid on time, whether it is leveraging technology. Of course, this requires a lot of experience in handling these kind of processes, which Krsnaa has huge experience and which is strengthened year on year. So we expect this trend to continue. Typically, as we mentioned earlier as well, Q4 is a time when most of the authorities also release the payments because they also have budgetary constraints and thresholds to ensure that the next year budget doesn't get impacted. So this is where we see a good recovery in the last quarter, and which is again typical to the industry where most of the government payments get released in the last quarter. Having said that, going forward, I think as we equally are trying to improve our process and ensure that we should be able to continue with this trend.
Is it fair to assume that over the next 3 quarters, again, the receivables may look a little spiked up, and then in every 4th quarter of the year, you may see that correcting, and for the year?
No, so normally it's cyclical. After Q4, generally Q1 would also look better. Then Q2 looks a bit stretched because, again, there the processes get delayed. Then Q3 and Q4 towards the end, then again you'll see improvement. So it's cyclical. Sometimes it varies between Q2 and Q3. But normally by Q4 is where we'll expect, the same trend to continue.
So usually, what is the time period for the national health agencies to pay you back?
So as it's typically from a contract perspective, though it is anyway 30 to 45 days. Normally, if you see the entire process, it takes anywhere between 60 days for us to collect a receipt. So average 60 to 90 days is what has been a past trend. Though both the sides are working to reduce this as much as possible.
Okay. And so lastly, on my end would be thoughts on the health pricing pressure that the newer players are getting in. I understand that we are not facing it because our prices are already fixed. But if there are a lot of other players also entering this space, how do you see this sector shaping up? And as for us, how does it benefit?
Right. Again, I think this is something we have to see, and it's across the industry, whether it is the aggregators, commerce players, or new entrants. So, of course, the competition is there, but the market is large. You are seeing few organized players coming together and entering into this. So, there is a competition, but as we mentioned earlier, from Krsnaa's perspective, to a large extent, we are immune from this competition. A, because we are present in most of these locations where you don't find competition. Number two, our contracts are typical 10-year contracts wherein the prices are also embedded and fixed. So there again, we don't see a pricing pressure. In fact, we have price escalations which allows us to increase our prices going forward. And number three, most of the places where we are present is, where there is a lack of quality healthcare or quality diagnostics, and people come to these district hospitals. So from that perspective, I think at least we are quite confident and to see that, this really does not impact us. Yes, we are seeing competition even on the PPP side, but as I've been mentioning, it will lead to establishing a healthy market from a PPP perspective when more competition also comes along.
Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Nitin from Invesco. Please go ahead.
Hey, thanks for the opportunity. A couple of questions. How much of growth that we are charting out over next 2 years should come from B2B model, and how much of it should be coming in from a B2C model, a ballpark number that you may have in your?
Yes. So, if you see, most of the growth that we are expecting to come is from what we call as the B2C, which is basically B2B2C. Through the B2B model that we already have established and centers maturing. Having said that, and to what Dr. Sethi has also mentioned, where we are trying to enter into the retail pathology market on the B2C side. So I think we have aspirations to grow this. Initially it might be single digit, but gradually we'll also grow it to double digit contribution coming to our overall revenues.
A big portion of it, our business will still be dependent on PPP model.
Yes. So for the next fiscal growth, most of the centers being currently under implementation, we expect them to contribute to the growth along with our existing centers to contribute. And the B2C side, which is a new entry that we are doing, or basically expanding our presence into the B2C side, that should also hopefully contribute.
Got it. A second question is pertaining to the profit aspirations that we called out. What are the big levers which can help us to drive this kind of profit outcome? And have we started witnessing benefit out of those levers already into our numbers? How should we see this?
Sure. So, as we've been mentioning, as Krsnaa centers start maturing, since most of the costs would already have been recovered, every additional revenue will further improve the EBITDA margins and profit margins. We can also see from the existing, current numbers that we have posted, and as more and more centers revenue starts increasing, it will certainly lead to an improvement in profitability. Now, some of the levers are, if you see from a cost perspective, we already have cost leadership that even at these prices, which are 50 to 80% lower, we are able to maintain these margins. And as our model is today, wherein at most of these centers that we are present today, the cost does not increase significantly. Most of them are stable. So we expect that to continue and further help us improve our profitability. Price-wise also, again, we don't see any downward price erosion which will impact our margins because it's contractually embedded. So again, if you see, there are these various levers, both in terms of the existing cost structure that we have, the pricing advantage that we have, where we should expect additional revenue to further improve our profitability.
Okay, which effectively means can we overshoot the margin trajectory that the entity was showing between, say, 2016-17?
Certainly.
Okay. And one last, tax rate for this year and quarter is low. Is this the number to go by, or it should come back to the 25-30 level?
Yeah. Could you just repeat that question?
A tax rate for the quarter and the year is low versus previous time. What should be the ideal number we should keep in mind?
For the tax rate?
Yeah.
Yeah, so I think what currently you're seeing should be what we will continue. This is, of course, because like with the new equipment getting installed, there's also depreciation that gets added to the tax calculation, as a result of which it will be slightly lower compared to the previous, and we expect that thing to continue.
So 20-21% is what we have ended the year with. That should hold on.
Yes. Yeah.
Right, sure. Thank you, and all the best.
Thank you.
Thank you. The next question is from the line of Utkarsh Maheshwari from Reliance General Insurance. Please go ahead.
Hello.
Yes, you're audible.
Yeah, sir. It was pretty impressive to showcase the guidance of doubling your revenues and tripling your profits in next 2 years. So what should be the steady state margins we should be able to do? Because I think this year we moved to 29 as a full year, but the Q4 numbers was at 26. And as you have mentioned that the prices are more or less fixed. So, what kind of cost escalation levers do we have in passing on the prices, and what could be the sustainable margins for us?
So, when you consider Q4 margins being a bit suppressed, is largely because we've had, employees that we have added or invested in the employees for this.
Hello? Hello?
One moment, please be online.
Yes.
The line of the management has been disconnected. Please be online. We are trying to connect them back. The line of management has been reconnected. Please be online.
Hello.
Please go ahead.
Hi. Are we audible?
Yes, you all are audible.
I
Please
think,
go
sorry, our line got disconnected. So as I was mentioning, if you see the quarter four, we've done investment in our employees for the new centers that are being added up. Going forward, we certainly see an improvement in our margins as the centers start maturing. Whatever EBITDA margins that we are currently seeing around 29%, we expect that to increase up to 30-35% and furthermore. From a cost lever perspective, as I mentioned earlier, most of our cost structure today is lean, and we expect that to continue. We don't expect any significant changes to our cost structure. Both whether it is reagents, consumables, employee cost, and whatever. So I think that is in line with the overall industry, benchmark. And of course, with every additional revenue, this should further improve our margin. So we definitely and very strongly, believe that these margins will improve going forward.
On the similar side, just want to reconfirm that you mentioned that you guys were getting into B2C side also, right?
Right.
So, what should be the thought process behind this? Because, B2C involves lot of, spending in terms of getting the marketing campaign and lot many more things. So, how do we intend to play that role side? Because it involves a lot of cost and lot of aggression is there with the competition.
So, our B2C market will be differentiated, as we mentioned earlier as well. What Krsnaa is trying to do is leveraging our existing network of centers where we are already present. So, and like Dr. Sethi mentioned, this will be an asset-light model where we should be able to, without any further increase in significant cost, whether it is marketing cost or any other cost, but still should be able to augment additional revenue. And that is what we are emphasizing and we are trying to achieve here. And hopefully, once this rollout happens, which will be happening very soon, you should also be able to see it in the subsequent quarters.
But sir, when the market is getting so heated up in terms of on the B2C side, with a lot of more players and large players are offering at a rates which are like super competitive. So why do we intend to burn the side? Because we always had the thought process not to pay to the doctors to get the test done. That is the basic reason why we went into this model of getting into hospitals and getting the PPP model in place. That was the first premise on which this company has been basically established, that we don't want to pay to the doctors for them to push patients for the testing, right?
Right.
So, are we changing that thought process? Because, this B2C was hyper competitive.
Yes.
Yes. Hello?
Hello, yes. Hello.
Yeah, please tell. Hello?
Yash? Mr. Yash? Mr. Yash?
Hello, operator, can you check? Is the line again got disconnected?
May I request you all to be online? I'm just checking the line of the management.
Please check.
Please give me a moment.
मैम एक मिनट ये ज्वाइन हो रहा है थोड़ा नेटवर्क प्रॉब्लम है ओनली 1 मिनट वेट हेलो
Sure. We'll wait for a moment. Ladies and gentlemen, please wait for a moment while the management we are trying to reconnect them. Please wait for a moment.
Hello, can you hear us?
We have the management reconnected. Please go ahead, Mr. Yash.
Yeah. So, in terms of, yes, there is already an existing competition in the market which is heating up. But if you see the model that we are creating, what we are doing is, for example, when we have, let's say, 100 CT scans today, we are just trying to ensure that patients who are currently coming, normally they come within a radius of, say, 20 kilometers to these centers. So for us, it is not a significant investment to connect with, let's say, these B2C partners who can send patients to our centers. The advantage that the B2C partners get is today they are only offering pathology services, whereas when they join with us, they get radiology services and pathology both. Again, radiology from a pricing perspective is much higher, from a test price per test basis compared to pathology. So they are also able to, increase their share of business. And at the same time, our prices, if you see in the market, are already at CGHS rates or lowest in the market. So from that perspective, again, we don't have to further give additional discounts or go deep discounting to whatever prices we are currently offering, that will continue. And the way we are looking at this model is where as I mentioned earlier also, it will be a low capex, low asset model with lower cost, but at the same time still be able to augment additional revenues. So
but this will be only more into the radiology, right?
Sorry?
This will be more focused towards radiology.
Both radiology and pathology.
पैथोलॉजी में तो ऑलरेडी जो सैंपल कलेक्ट करा उसको तो ही इज ऑलरेडी डूइंग इट ना.
नहीं, तो अभी कैसा हो रहा है, देयर आर सम, जैसे इन सम सेंटर्स व्हिच आर ओनली टुडे वी सी लेट्स से गवर्नमेंट पेशेंट्स कमिंग इन, बट वी आर आल्सो सीइंग एन इंक्रीज trend of private walk-ins coming into our centers, and that is what has led us to believe that if we are able to expand this, more and more people can come and avail these services, because today patients have also become aware that in government centers you can get such kind of facilities, so why not expand the reach?
I think I'm still not able to get the full hang of this B2C side, what we are trying to,
So I think once we launch in the market, hopefully very soon we'll be able to see the differentiators and then appreciate, how we are coming with a very different model.
I just hope that we are not getting into a price war to a larger extent.
No. Whatever our prices, we will continue to do it, whatever our model is. I think essentially we're not changing the model. Our model is still strongly driven with whatever we have established as a base, which is PPP, our existing private hospital partnerships. B2C is just to leverage our network and nothing more than that.
And our prices also are benchmarking to the CGHS rate and even lower than the CGHS rate. So we are coming with the prices in a similar range of prices wherever we.
Fair point. All the very best. Thanks.
Thanks a lot.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
Sir, my question is, one, in the next 2 years, so versus the centers that we have today, and based on whatever contracts we have on ground to be executed, Punjab is where the clarity is yet to come. So if we exclude that, what is the number of centers that we will go to in the next 2 years? This is without assuming any new contract signing that you do, just what you have today on ground.
So basically you are saying considering the existing centers that we have,
firm commitments that you have,
all the projects.
If you complete based on whatever timelines you have, if those timelines are the next 2 years, then you consider next 2 years.
So assuming that we complete all our existing projects in hand and without any new projects, we should have around 150 of our radiology centers.
Versus today?
Versus I think around 107 is what we have today.
150 versus 107. And how about pathology?
Proposed near about 1,000 collection center and near about 30 labs. New.
So, yeah.
Sorry? So 1,000, you will go to 1,000 versus?
Existing almost close to 600 centers.
Okay. And the tele reporting?
Will slightly add around 150 further tele-reporting centers.
Versus today of?
1381.
Okay, so 150. So basically 1,500 versus 1381.
Yes.
Okay. And so basically you are 2x adding your capacity in PATH and about 50%, and still you have given a guidance of doubling of revenues over the next 2 years. So you need to really utilize your existing assets significantly.
Yes.
Yeah. Isn't that guidance of 2x revenue really aggressive?
Yes. Hello.
Yeah. Are you waiting
Hello.
for... Hello.
Hello.
Are you
Yeah,
done
ma'am.
with your question?
No, ma'am. I'm waiting for the answer. I think the gentleman is asking for Yash, or is he saying yes to my answer?
One moment. Speaker, you may please proceed.
Should I go ahead?
Yes.
Yeah, sir. My question was, when you're giving 2x increase in revenue over the next 2 years, the capacity increase that is plotted in the based on whatever you have mentioned in terms of center increase, about 40-50%. So your 2x increase, a lot depends on the execution or utilization of your existing centers. Sir, any comment you want to make in terms of how those utilizations will pick up?
Little bit.
I believe there is a issue in line. Just stay connected.
Yeah.
Ladies and gentlemen, please be online. We are trying to connect with the management. Ladies and gentlemen, the line has been reconnected. Mr. Yash, please go ahead.
This is happening, but this has been unprecedented compared to all the calls that we've had. So my sincere apologies to everyone here. Continuing with the answering the question. So if you see today, our Punjab project is yet to be activated fully. We just started with it. Himachal Pradesh is a project which is currently under implementation. Our other centers, whether it is Mumbai, some of the centers in Karnataka, and even if you see almost a significant portion of our gross block from a center perspective is yet to mature. So with the combination of all of these existing projects which will be maturing in the next couple of years, and with one or two tenders that we've already participated for which we are expecting the results out, we are confident of achieving this 2x growth that we've mentioned.
So where are we on the asset-light model in our incremental expansion, which is pay per scan or getting equipment financing from the supplier? Where are we on that path?
So from a vendor perspective, we've received the clearances. Now it's only from, how do we do the mechanics in terms of the agreement that we'll have between Krsnaa and let's say the OEM vendors. There is some, taxation and accounting advisory opinion that is currently being obtained. Once we receive the clearances, then we will be implementing. So hopefully by end of this quarter, we should be expecting to formalize at least a couple of agreements in this direction.
This formalization is valid for all the agreements or all the contracts that you have won so far?
No. This will
possible or this will only be incremental?
Incremental.
So which means in your contract also you have to state the mode of financing of your...
No, not required. There is no such requirement. As far as the contract stipulates, the government just wants that these have to be brand new equipment, which is one of the conditions.
So if you let's say by half year, whatever you're mentioning in the next couple of quarters, you do your agreement with the vendors.
Mm-hmm.
The capex which is planned in terms of centers that you mentioned, 100 going to 150 radiology, So we will start seeing the vendor financing happening on this expansion, or it will happen on contracts now you will win.
No. So basically for the existing contracts that we've already signed up, they already will be covered under the existing arrangement that we have with the vendors. The new projects or new tenders that we win, they will be under the new methodology or the new model that we are adopting.
Sorry, I missed this line. You mentioned so it will only be on new incremental contracts?
Incremental, yes.
On these contracts you will not get asset light?
Yes, because they've already been, for which the purchase orders have already been raised.
Exactly.
There have already been commitments from us to the vendors.
So, sir, what is the
part of the actual purchase?
Perfect, sir. So, what is the capex that you'll spend in 23 and 24?
So, typically, we expect to incur about 100 to 150 crores of capex. That we are trying to see how we could use through this new model.
No, sir, but this capex you have spent over the next 2 years, right? So, for bringing these centers up, so it will not be under the new financing model, no? You just mentioned.
No, I'm saying the new capex that we are planning, which typically ranges between 100 to 200 crores annual new capex that we plan to do, that is what we plan to roll out through the new model.
So my question was, what are you going to spend in 23 and 24? Because
for the existing ones.
Exactly, sir.
Oh, okay. I think for the existing ones, it will be almost around 100 crores that we will be spending.
In 23 and 24?
Yes.
Okay. Thank you very much, sir.
Yeah, thank you.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks for taking my question. Yash, just taking out from your guidance question again. So in terms of the guidance that you put out for the revenue growth, the doubling of revenue growth, I mean, in your so how much of that, what kind of visibility do we have in hitting this number?
Could you just repeat the question, Nitin? There was some static in the line.
I'm saying what for this revenue growth target that we have for doubling the revenue over the next 2 years, what kind of visibility do we have? What proportion of this gap from 450 to 900 do we have we covered? Do we have strong visibility on covering right now?
Yes. So if you see what we mentioned earlier as well, with the Punjab few other projects going live, we are expecting at least uptick in our revenue to between 30 to 40% in this fiscal, and even higher if all goes well. And as the centers mature in the next year and in the year after that, both these, as the centers mature, we expect these numbers to be achieved. So we are confident in the projections that we laid out for ourselves, and hopefully in the next 2 years we should be achieving this target that we set out for.
And secondly, on the, you've talked about from 100 going to about 150 centers for the radiology centers over the next 2 years based on the existing contracts. What is the kind of pipeline which is there for newer contracts that you're seeing coming through that probably can get awarded over the next, say, year and a half, 2 years?
Yes. So currently there are some 4 or 5 large contracts or projects that Krsnaa has participated, or what we see. I think 1 or 2 of the projects should be awarded. Hopefully we'll see the results coming out soon. They are still under the evaluation phase. We are expecting by end of this quarter we should see the final results getting awarded. And there are around 3 or 4 contracts which are still in the pipeline, which once we participate, then we'll be able to tell. But there is a good healthy opportunity for us to continue tapping into new opportunities as they are coming along.
And if you can help me, so what would be the approximate size of number of machines center installation will be at play in these 4 or 5 contracts which are up for bidding?
So some of these are large contracts, like they could be almost around 100 CT scans, about 35 MRIs, and collection centers, it could be 2,000 plus pathology collection centers.
This is all put together?
Yes.
And secondly, while the pathology B2B business essentially was something that you just started doing in a couple of states, now is there you seeing instances of more and more governments trying to explore that route also on, earlier it was largely radiology driven?
No. So, like I said, there are various states which are currently evaluating pathology PPP projects. Typically, the hub and spoke model is what the states are evaluating. So, there are almost, various states which have already in the discussions. Some of the tenders had come up. They are now basically trying to, increase the presence or increase the scope of the tenders. So, yes, many other states are also looking into this model. Because, when one state taste the success of a model, and when these IS officers, when they have their internal discussions and deliberations and review, and that is also where they share the successes, and that is where we are seeing other states are also in the queue. In fact, one state which was never in the queue has also come up with the first tender. So we are seeing positive outlook in all these various other states which will probably adopt the similar models.
And lastly, when you're looking at your FY24 guidance, what is the broad split between B2B radiology, B2B pathology, and B2C pathology is what you think will look like very broadly?
So broadly, we will continue with our existing model. So if you see our radiology and pathology split would be in the range of around 60 to 40%. The B2C pathology is, as I said, it will initially start with single digits, so we're expecting anywhere between 5% to 7% of the contribution, given that it will be the first year of implementing these new models, and hopefully now then we should be able to ramp it up in the subsequent years.
Okay, so still radiology will continue to be 55-60% of the overall business.
Correct.
Thank you.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Thank you very much for the opportunity. So most of my questions have been answered. Just one thing, what's the EBITDA margin outlook we have for FY23? I understand you gave for next 2 to 3 years, so just wanted to understand for next year specifically.
So from an EBITDA perspective, currently I think we are at about 30%, so we will be able to continue that EBITDA percentage, given that in this year there will also be this project ramp-up going on. So we are expecting it to be the same. Of course, our efforts will be to improve and increase the EBITDA percentage as we go along. But at the best, it should be in the range of 30 to 35% is what we're expecting for this year.
30 to 32%?
35%, yes.
So 32 to 35% that you mentioned over next 2 to 3 years, right?
No, for this year also, assuming that all the Punjab and Himachal Pradesh will go live, we should also expect by end of this year, try to improve our EBITDA from 30 to 35%.
Okay, fair enough. And in next 2 to 3 years, so what's the ROE, ROC we are targeting?
See, if you see, like we have described in our presentation, for most of our mature centers, our ROC is already north of 33%. And even if you look at it from a overall basis, we are almost in 20% range. So as the centers start maturing, the ROCs and ROEs will certainly improve going forward.
Okay, understood. Okay, yeah, that's it from my side. All the very best. Thank you.
Thank you.
Thank you. The next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Thank you for taking my question, and congratulations for good number. Also appreciate the kind of presentation with the clarity you have given this time. So my question, most of my question has been answered. Just about data point I wanted that in teleradiology, what was the revenue last year? Because last year revenue was merged with your total radiology business. So if you could give this split. And secondly, if you could give a split between MRI revenue and CT scan revenue for a full year, so that will help.
Sure. So the tele-reporting last year was around, if you can just answer.
Yeah, so last year the tele-reporting revenue was 23 crores, 23.5 crores.
Okay.
And what was the second part of the question? If you can just repeat.
MRI and CT. MRI and CT scan split.
CT scan and MRI revenue and pathology revenue different. I think so total 450 or 134 आपला जर COVID minus केला.
So last year radiology revenue CT MRI comprised both together 138 crores.
That was together, but is it possible? Because see, in terms of volume, we see the split is 75 to 25%. So 75% is CT scan and 25% is your MRI. So that because the pricing is different, so that will give some more perspective. Because MRI, the average pricing, average realization is higher than CT scan. So that
I think we don't have the number at the moment, but we can share that with you separately on this after the call.
Okay, fine. And the last
one is CT scan and MRI, right?
Yes.
Yes. Okay.
So because volume you have already given, so that will help.
Sure.
And secondly, on Q1 number, so that Q1 number, because if you look at realization has been obviously lower than the last year, and even on the average FY22 realization per unit, either in radiology or in pathology, is also lower than in Q4 has been lower than your average year's revenue. So that run rate is likely to continue, or do you see any risk here that realization, like in radiology, is going to improve, or we have some pressure where it can go down? So if you could throw light segment-wise, that will.
This is mainly because last year we see a number with the COVID affected, and due to the COVID, the prices and the test rate is slightly different. But if you see overall, if we compare with the FY20, our revenue per test and the revenue for a radiology is growing and stayed constant, and we have achieved the pre-COVID level of revenue.
And just to add, hello?
Yes.
Yeah, just to add, if you see our model perspective, as I've been mentioning, the prices for us are fixed. So there is no reason why the prices will go down unless, let's say the test menu changes or the test mix changes. There are no downward revision of prices in our model. The prices are contractually embedded. So we don't see any pricing pressure going forward. I think what Pawan mentioned, what Pawan mentioned was, it was a combination of COVID tests coming down, and that is the reason why you see it. But if you compare with our pre-COVID levels, we've actually improved in terms of the price per test and price per patient.
Okay, fine. Thank you. All the best.
Sure. Thanks a lot.
Thank you. The next question is from the line of Manoj from Geometric. Please go ahead.
Congratulations on very good sets of numbers and very good guidance. My first question is, historically we have very high ratio of winning tenders, like 80% plus, like 4 out of 5. Do you think this can continue also in the tenders we have bid recently? What's your view on that? What is the competition intensity in tenders?
So of course, while historically we've got a good strike rate of winning the tender, we expect the trend to continue for two reasons. One is in terms of the experience that we've had, expertise that we've built over the years in how to survey and then bid for these projects. So we are confident of continuing that trend. Also, more and more tenders as they're coming in, government are putting in clauses where they want serious players to come in, either by considering the turnover criteria or the network criteria. So there again, we are seeing that though there might be competition, but at the end of the day, government is looking at serious players, and most of these players get disqualified at the technical rounds. So we are confident to continue this win ratio. But again, as time will probably tell, and we should probably see how it happens in the next couple of quarters.
Great. Second, we are entering into B2C, and we want to use their existing infrastructure to take the benefit of that. I think only part of the expense will be the business and marketing. Can you quantify how much we will spend in this business marketing? Any ballpark idea in next 2 years?
So frankly, as of now, it will be a bit early for us. Like as I said, we are just launching these models. I think once we launch, we'll also be able to test how the response is and then determine how much should be invested in these so-called marketing activities. But from directionally, if you ask from a management perspective, we'll try to ensure that the costs are lower. And this is what Krsnaa has been doing for the last so many years, where our marketing spends are low, and we plan to continue with that kind of philosophy.
Okay. Thank you and best of luck.
Thank you very much.
Thank you. The last question is from the line of Shiva Prasad from Tara Capital Partners. Please go ahead.
Hello? Am I audible?
Yes, Shiva, you're audible. Please go ahead.
Good evening. My question is with respect to vendor financing. So if you just take an example of 100 crore capex, in the present case and the future case, how would that benefit boil down to?
Could you just repeat that question, please?
So if there's a 100 crore capex in the present scenario which did not have vendor financing, and in future when we take vendor financing, how does that profit us in any ballpoint figure for a 100 crore capex?
What was the last part? How does that?
What kind of benefit that we will achieve through vendor financing?
Oh, okay.
Any ballpoint figure for a 100 crore capex?
With the new model that we are envisaging, basically as it becomes an asset-light model, we will be able to leverage the same, wherein our ROCs will be much improved. Though currently we have a much better performance, but we are trying to improve from a ROC perspective as well. And at the same time, it also basically you have the vendors who are also now going to have their skin in the game with this kind of a model. So we see a lot of these other benefits also coming into play. And this allows us to expand into more projects without utilizing our cash on the books. We can just straight away go on a paper scan model and bag or expand new projects.
Okay. And the next is the Tele Reporting part that you have, the new segment that you have expressed in here. Wanted to understand if someone has to have a CT or MRI scan, he has to approach one of your centers, right? Hub centers.
Yes, so the process doesn't differentiate for a patient. Whenever they come to our diagnostic centers, whether it is for a CT scan, MRI, and X-ray, they come, they avail their scan. Just instead of having a physical doctor there to give the report, it is done using technology, where the doctor could be sitting remotely. So from a patient's experience perspective, it doesn't change anything. In fact, the advantage that this model has is the patient gets the report in very less time. In fact, some of the places earlier where there was no tele-reporting, the reports were available anywhere between 3 to 7 days. And the same report now, because of Krsnaa's tele-reporting model, is being available within 45 minutes to 2 hours flat. So that's the kind of impact it is creating in the lives of patients.
But there won't be a machine at every Tele Reporting center, right? A CT or an MRI scan.
No machine has to be there. So for every CT scan, MRI and X-ray, we have a machine, whether it is a CT scan, an MRI or an X-ray machine. Basically, that is what the investment that we do, which when we mentioned earlier, world-class equipment, all our equipments, whether it is a GE Philips or a Siemens CT scan or an MRI, these are installed at the respective centers.
Okay. Thank you, team, and all the best, sir.
Yes, sir. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Bharat Celly for closing comments.
Thanks, Krsnaa Management, for giving us opportunity to host this call. Is there any closing remarks from you, Yash, before we close the call?
Sure. So thanks, Bharat and Chorus, for coordinating this call, and we thank every participant who's attended this call for sparing the time for us. And once again, sincere apologies for the issues that we had, and we thank you for asking this question for us. So look forward to connect with you soon. Thanks, everyone.
Thank you. On behalf of Equirus Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.